Hello and welcome. You're watching First Take here on News 9, where we bring to you the morning buzz on the Lal Street. I'm Suyash Maheshwari and with me in the studio is Amit Ranjan. It's a Tuesday morning and the markets have once again opened deep in the red. The headliners, Sensex and Nifty, are nearing some crucial support levels. From the top, Nifty has given up close to 600 points now. The reason? It's geopolitics again. Remember, yesterday it looked like Israel was not looking to respond to the April 13 attack on it by Iran. Iran too said it would stand down and the things are settled for now. But now the head of Israel's military has said that they have no choice but to retaliate. Iran in response has also threatened to deploy weapons never used before if Israel strikes back. And for the market, Amit, more than anything, it's the sentiment that gets hurt, and we are seeing a sell-off across the board. Asian markets are correcting, US markets are correcting, markets over here deep in the red.
Gratefully, the noises that are coming are not affecting the markets as much as they could have, because it's been over 2 years that the world has seen wars of some sort happening in some part of the world. So with the noises that you just mentioned that are coming from both sides, the correction has not been that much. It's in the red across the board. Dow Jones closed in the negative at 0.65%, S&P 500 1.2% in the negative, Nasdaq Composite 1.79%. Europe surprisingly is still in the positive as it was yesterday in the positive at 0.13%. That was stock 600. Now the Asian stocks and currencies have tumbled because one, the expectation of a dollar rate cut is not has basically just stalled, and there is an expectation that it may not happen at all this year. And two, there are signs that the China's growth recovery has been stalling a little bit. So whether it is Hang Seng, whether it is Nikkei or Korea, stocks have fallen across the board. MSCI, Asia's Pacific Index, dropped most to its maximum in the last 3 months. Hang Seng this morning, again in the negative at minus 1.87%, Nikkei minus 2.04%.
All right, and I think what's also adding to the pressure is the data that's coming out in the US. I mean, the retail sales data again was beyond expectation, and that really hurts the rate cut narrative. I mean, I'm reading some of the brokerage reports, some of the sell side analysts are now predicting that in 2024 we might not see a rate cut at all. I mean, the slew of data releases. More than anything, I think the markets are looking at it as a negative. I mean, the good news is looking at the market, at least, is looking at it as bad news. But overall, it does, show that the consumer sentiment across the board, the spendings are strong, and the consumer sentiment, it's not really being impacted by inflation, Amit. But coming back home, the markets, they are seeing some slight recovery from the lows. We have taken support near the 22,125 mark on Nifty, but we are struggling around that 22,200 zone. Currently, as of 9:30 am, in fact, Nifty was down 0.37%. So a recovery has been seen. The broader markets, they are both in the green. Mid cap index is up 0.1%, whereas the small cap index is up 0.75%. But India VIX, again, it's near that 12.5 mark. But again, time and again, when there is a geopolitical upheaval, we talk about, how much the markets will correct. And Nifty again has corrected by about 2.5% in a matter of 3 days. But the question really now is, how much the markets will fall further from here on if the tension indeed escalate. And for that, we have a technical guest joining us, Mr. Brijesh Iyer of IDBI Capital Markets. Sir, thank you for joining us here on News 9. I mean, another gap down opening for Nifty. We have given close to 600 points in a matter of 3 days. But we have taken very interestingly support near the 22,125 mark today, which incidentally was the record high the index hit in January of 2024, and a zone where we spend a lot of time between that Jan to Feb in that Jan to Feb series. Is that a key support going forward from here on, sir, considering that we are seeing some bit of recovery even from those levels this morning?
Yeah, good morning, Suresh. So what we can observe at current scenario is that definitely there has been a correction. Profit booking was seen. We believe that 22,800 level can be seen on the higher side, and somewhere close to those points the market went, and then we saw the correction. The correction came in the form of the global news. So now 22,200, 22,300 was the expected downside range. And if you see the last one, when the index broke 50-day moving average and it's made a low of 21,700. So my sense from the technical point of view is as long as that swing is not broken directionally, we would still be in an uptrend. So, and largely why I'm bullish, because if we see the expiry rollover data and everything, everything was like quite strong. Bank Nifty gave a very strong breakout at 48,000 level, and now Bank Nifty is correcting back. Little bit, it has corrected more 500 points for the 4800 mark. But then I believe the FIs had exited their short positions in the market, and lately because of last 2 days of corrections, likely the selling there has been selling pressure. But then I want to say that till the elections are not over, I don't think we see any major corrections. This fall has been mainly because of the event, the war thing which is going on. But then I don't think this is on the market has fallen on its own. So this levels of 22,100 on a maximum 22,000, I think we'll see some demand coming in, and that the previous month low of 21,700 will be protected is what I sense. And the quality stocks, which has given a very good breakout, IRCTC, Engineers India, the metal space, which has run a lot. I think all these sectors will remain a buying opportunity, and we should play the long trades in a stock specific trade. I am not saying that Nifty will make a new high. Nifty will be in a range, and this lower levels of 22,100, 22,000 will act as a support for the Nifty.
Good morning, Brijesh. Now, the follow-on public offer of Vodafone Idea is due in 2 days. They are raising 18,000 crore via equity, a part of the 45,000 crore they are raising via equity and debt. But looking at the stock, the last few days it has been choppy. It spiked on yesterday for some time, but right now, today again it is down. What do you make of the Vodafone stock? It was 13 yesterday, around 12.7 today. Do you think it is a time to get in, or is this stock basically going to see a lot of lows before it finally rises? Because their books, there are lots of debt that they still have to deal with, despite the 45,000 crores that they are raising.
I do understand this, but then somehow these levels of 12 and then it's a beautiful level from the risk reward ratio also. I don't think it will be broken that easily. The stop loss, if somebody wants to take a fresh entry, the stop loss would be hardly 2 to 3 points from the current level. And the recent high, what we saw in Vodafone was somewhere to the 18, 18 and a half. So there is obviously an opportunity over here. I think one should view this as a somebody who can take a technical call and follow the stop loss. Then I would 100% recommend that just take that the small risk. Maybe not exactly 2, 3 points, but then my understanding is that there is a very limited risk. So with that perspective, if somebody was to take that trade, I think it's Vodafone is at the entry level. What we should be viewing. Checking on.
All right, and Brijesh, another stock in the news this morning is Geo Financial Services. JFS has announced its joint venture with investment giant BlackRock to float its wealth management and brokerage ventures. The partnership, however, is subject to regulatory and statutory approval. But Brijesh, coming to you, enough and more for investors to celebrate here. I mean, the stock this morning has rallied close to 4%. Year to date, it's up about 57-60% or so. I mean, are we heading towards that 400-450 levels on JFS soon, sir? What's your take?
I think yes, what you said is right. There is a high probability that we might see those levels. This whatever the corrections, the recently 355 maximum 350, 355 is what it can see some downward correction just in case if there is some sell-off. So I would be buying the Geo Financials in part, maybe some at this level and another whenever it corrects by 20-30 points from the lower side. And I do believe that 450 plus can be seen in the Geo Financials. So one should be taking a long trades.
Okay, long trades on Geo Financials. But Brijesh, what are your picks for our investors today?
Basically, yeah. So I think, as I said, my understanding for the market is whatever the stocks which were having a relatively strength should be viewed to go long. For example, yesterday in the entire market, the OMCs were the pack. Within that, ONGC was something which was holding up. The close for the ONGC were quite good. So I think one can go long in ONGC at current price with a stop loss of 268 for target of 295. One more stock which is picking up was the Anand Rathi. Most of the broking firms are again picking up strength. So I think Anand Rathi can be bought at current price. The stop loss would be rounding off to 4,000 mark for the target of 45.50. And second one is the CDS. Third one is the CDSL. It's a little bit of long-term call. The structure which I'm seeing is from the weekly point of view. So it will take a couple of weeks to see this move. So CDSL can be bought at current price with a stop loss of 1856 for the target of 23.50. This is nearly some 20% kind of a gain. A little bit longer time frame, I think this we can see those levels.
All right, 2NGC, Anand Rathi and CDSL are on the radar of Brijesh Iyer for the short term, CDSL for slightly longer term. Sir, thank you for joining us here on News 9. Always a pleasure speaking with you.
Thank you.
But with that, it's time to slip into a short break. On the other side, Mohit Gang, co-founder and CEO at Money Front, joins us.
I try and convert almost everything in a kind of a mathematical formula.
You should always stretch more than you can reach.
Listening is very important.
Because if you don't listen, how would you know what the problem is?
Everybody who's working in and around me, their personal well-being is also a responsibility that I carry.
Great leaders have shared vision.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
India produces between 1,500 and 2,000 films every year, the highest for any country, but they get ignored at international awards.
The Oscars are basically American national awards for themselves.
You're not going to be able to make a better pizza than an Italian chef. You're not going to be able to make a better better sushi than a Japanese chef. Will you make better khichdi than a Japanese chef? Right? So I want you to taste my food. We are making cinema that we are proud of.
In fact, it has been 2 decades since an Indian feature film featured in the Oscars International Film category.
All these years, for much of its history, they've been just awarding their own films, and this one tiny category, Best Foreign Language Film, had the entire world frothing at the mouth to get into the Oscars.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight almost deliberately.
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
Welcome back. You're watching First Tick here on News 9, and the markets, the recovery continues over there, but Nifty is facing some resistance around that 22,200 odd levels. That incidentally coincides with the 40-day exponential moving average, which sits at about 22,203 currently. We are hovering just below it, but Nifty again this morning opened gap down. It took support at 22,125 mark, which remember was the January the record high Nifty had hit in January of 2024, and we have spent quite a bit of time around those levels as well, so that could be a crucial support going forward as well. But 22,200 is a level to capture for us for more upside from here on, because that's the 40-day exponential moving average. Sensex is also down about 0.44%. It's above 73,000 levels now. The mid cap and the small cap indices, I mean, quite choppy this morning. The mid cap index was trading in the green, but it seems that it has reversed and it's in the red now. The small cap index is up close to 1% this morning, so the strongest segment of the market. But again, there are a lot of geopolitical uncertainties, and to understand where we go from here on, let's also bring on board Mr. Mohit Gang, co-founder and CEO at Moneyfront. Mohit, thank you for joining us here on News 9. I mean, the equity markets globally have corrected sharply amid this, the slew of geopolitical concerns. Nifty in this fall has given up close to 600 points, down 2.5% or so. But the question really is, how long the markets will continue correcting. We do have some reference points. When Russia first invaded Ukraine, the immediate knee-jerk reaction in February of 2022 was Nifty gave up close to 8%. When Israel-Hamas war broke out, Nifty gave up close to 2% or so. Do you expect a bigger correction here on, considering, I mean, from this conflict between Israel and Iran, considering the closer proximity and the oil trade in the mixer?
Hi, Suresh. Morning. Look, there are two ways to look at this entire conflict. One is that both the parties involved out here, Iran and Israel, are seemingly not in a mood to escalate the entire thing. Look, Iran, any which ways, is under severe sanctions from Western countries and Europe. And any kind of escalation will mean more sanctions and crippling down the economy further, right? So Iran potentially can't afford to get under more sanctions. Israel, any which ways, is fighting wars on many fronts, right? So it won't want to open a front which can potentially be extremely severe and can drain out their energies and resources and so on and so forth. And again, the support base of Israel in Western countries and US is depleting by the day, right? So I think both the countries potentially are not in a position to escalate this further. Having said which, I think there were some statements coming out of Israel yesterday saying that they would retaliate, and which doesn't augur well for the markets. My sense is, even if there is a kind of a retaliation, it'll be more semantics. It'll be more to show the people that yes, they are ready. I still don't foresee a grave escalation of this entire situation, but markets being markets, they will be under severe pressure till such time that the situation completely eases off. My sense is, I don't think so. Even if Israel retaliates to an extent, I don't see markets like really crashing or crumbling. However, Iran remains a global oil supplier, a big oil supplier, and plus controls the global sea routes to a very, very large extent. And I think potentially that is what is spooking the markets. So my sense is we will have to wait and watch till the situation completely eases off, perhaps next a week or 10 days or maybe 15 days. I think till such time that the situation completely calms off, markets might remain sideways.
All right, and just to clarify, India currently does not import oil from Iran, as Tehran is under sanctions from the US. However, another major buyer, China, does import large volumes of Iranian oil. If the conflict leads to Iranian supply getting hit, India's competition with China for other suppliers, particularly Russia, is bound to intensify. And India and China currently, remember, are the biggest buyers of discounted Russian crude oil. So there will be not immediate impact of this escalation in war in Israel and Russia, but we will see volatility in crude oil prices. And it's again, Iran is the third largest OPEC producer as well. But we'll move on, and a particular segment of the market, Amit, that is providing some floor in this correction is the metal stocks. Please tell us why.
Now, China, the reversal in the fortunes of China's economy, basically was good news for metal manufacturers and explorers, because they are the largest consumers of metals across the board, whether it's aluminium, steel, zinc, manganese, whatever. Now what happened yesterday was that US and UK imposed sanctions on Russian supplies of metals, which made aluminium and nickel specifically surge 9 and 8% in the Western stock markets. While one was good news, how do we see the metal stocks in India? Things like companies like Hindustan Copper have given returns like 258% in the last 1 year. 117%, Steel Authority 84%. Mohit, where do you see metal stocks going? There are mixed signals. On the one side, China's growth basically was good for the metal industry, but that is tapering off now. There is news that the growth story of China is tapering off. And then there are these new sanctions on Russia. Do you think it is good news for Indian metal companies?
Hi Amit. Look, honestly, I think you said it all. It's a mixed bag, and depends on how you want to look at it. We'll have to go stock by stock and figure out what is the dependence of each stock and what is the main supply source and origin, and so on and so forth. Having said which, I think the ban by LME on Russian metals being imported only by US and UK, my sense is, isn't much of a dent. To be very honest, Russian metal has been selling and China has been buying Russian metals directly. And the Chinese imports of Russian metal has been growing dramatically over the last few years. In fact, Chinese aluminum import from Russia is at an all-time high, if you check last year's data. Right, and Russia continues to remain a large global supplier of aluminium, nickel, and the grade 1 nickel. I think Russia supplies almost 14% of world's supply. So I think Russia continues to dominate that thing. Trying to curb the Russian supply will mean that the prices will break. For Russia, the prices will break in the non-LME markets. Which means Russia will have to sell its inventory cheaper, and perhaps that benefits China and to some extent maybe even India, right? And I think it should look, there are two ways of looking at it. Cheaper raw materials, if India can source directly from Russia, like the way India has been doing on the oil front, I think will augur well for the companies, and should reflect in higher what do you say, the inventory costs any which ways are getting repriced, though those are all mostly hedged. But my sense is it should augur well for the metal companies in the near term. However, a very large, long-lasting impact, you never know how the second order and the third order impact plays out on this. But my sense is in the near term, if India can source direct supplies from Russia, and if the companies individually will have to check, can perhaps figure out a way to get their raw materials or inventories directly, then I think it augurs well for the metal stocks.
So Mohit, what I can make from your answer is the rally is not going to stop on metals, but BJP's Sankalp Patra, their manifesto came in yesterday, and there are certain sectors that they have bet big on, and the consumers or investors can look at to bet. One is housing. They have promised that they will expand the Pradhan Mantri Awas Yojana, strengthen RERA, and facilitate home ownership amongst middle income groups. Tourism, all the islands are BJP is looking at making them as global tourism hubs, especially islands. They have specified that. Railways, 5,000 plus kilometers of railway lines every year. EVs, the new EV policy is on, and the government itself is going to be focusing on developing EV infrastructure, especially charging across the length and breadth of the country. Auto ancillaries, ones that are likely to benefit most from the new EV policy. PSU banks, now they have the manifesto has promised to double the Mudra loan limit to 20 lakhs. So that is good news for basically public sector banks in the small loan segment. MSMEs, working capital will be provided through the Digital Credit, Digital India initiative. Natural gas, pipe gas to all big cities. FMCGs, unprecedented increase in MSPs, which is likely to be good news for companies like HUL, PNG, Dabur, the ones in that sector, pharma, PLI has done its bit in promoting APIs, manufacturing and research in India. Mohit, what do you see this as big growth sectors, or it will be more than this? These will affect the other sectors as well, or is it just these sectors? And which among these do you think investors can look most closely at?
Amit, yeah, I think since the time the Sankalp Patra has been released, market has been analyzing every finer detail, every line out there, and trying to figure out what stocks are potentially linked and which can perhaps benefit. And I think market to some extent or to a very large extent is factoring that the same incumbent government will continue and come back with a full majority. If we continue to believe in that hypothesis, then yes, I think there are plenty of sectors and stocks which look attractive. However, if you go very closely, honestly, I think 70-80% of the sectors are covered, right? There's very little you can say. You see the focus on self-reliance and manufacturing, which is both on defense side, the aero products, aviation, shipbuilding, all those stocks are somewhat covered. The focus on EV, semiconductor, chip manufacturing, and so on and so forth. So that's covered. The focus on Har Ghar Jal kind of covers the water theme. The focus obviously continues to be on the railways and other things. I think ancillary companies on the housing front, perhaps ancillary companies which helps railways also to a certain extent, ancillary companies which help defense also to a certain extent, are the ones to be closely watched. The pipe companies, the wire companies, the cable companies, right? I think those are the ones which will see massive amount of growth with or without government action also, given the way India is demographically changing and given the way the infra development is happening across, right? So my sense is defense, local manufacturing, EV and semiconductor, water, and the ancillaries which feed into housing, the ancillaries which feed into defense, the ancillaries which feed into manufacturing per se, are the ones to be closely tracked.
All right, I mean BJP Sankalp Patra is definitely all encompassing, but a few sectors, ancillary particularly, could be an industry for multiple sectors that could benefit if BJP returns to power. That's a word coming in from Mohit gang. Sir, thank you for giving us time here on News 9. Always a pleasure speaking with you.
Thank you so much.
But before we wrap things up, let's look at how the markets are doing, because we have staged a recovery after a gap down opening where Nifty fell as much as 150 points. Currently, we have actually reclaimed 22,200 on Nifty, and that is important because that is where the 40-day exponential moving average was. Now, since that level is conquered, the key of course going forward will be if we can sustain at those levels. Remember, today is the weekly FNO expiry for Bank Nifty contracts, because the markets are shut tomorrow on account of Ram Navami. So today we have the expiry of Nifty Financial Services contract as well as Nifty Banking contract. When we return back on Thursday, we will have Nifty's expiry as well. So the markets will be choppy, and adding to the pressure is geopolitics. Remember, there are a lot of concerns about what Israel is going to do next after the Iran's overnight barrage on April 18th, where it launched 100 of missiles on it, and Israel actually, it looked like it was going to stand back, but the word coming in from its defense ministry, the top officials, is that it's bound to retaliate, and Iran in response has said that it will also strike back if Israel chooses to respond. So the markets will see a lot of volatility. We have enough and more local factors as well. Remember, we are in the midst of the earnings season, the Q4 earnings season. On 18th, when we come back, when we return, Infosys will come out with its numbers, Bajaj Auto, SGFC, AMC. So a lot of we'll pretty much be entering into the thick of the earnings season. So far we have just had TCS. The numbers look rather good, but with IT bellwethers lined up, I mean, of course, the focus will be on what the management commentary coming out will be. The guidance for FY25 will be, and the order deal wins. So that will be the 3 focal points to look out for in the earnings of these IT companies, which are scheduled to come out in the next 4-5 sessions. I mean, we have Infosys and Wipro on April 18th, and then next week we have HCL Tech. Persistent is also there. So IT stocks will be in focus as well. But on that note, let's end the show. We'll see you at 4 p.m. on Last Check. But up next is World Business Report.